Good afternoon, everyone. As usual, we are here with you on Thursday afternoon, 12 p.m. CST, with one new topic. Every week, me and our team putting efforts to bring knowledge to you. And today, we have come up with a new topic: estate and gift tax planning. Which are what are the essentials and what are the strategies you should follow to optimize it in our community. The gift tax planning or estate tax planning is very poorly handled by many of the individuals. Apart from our regular income tax, federal income tax, state income tax, sales tax, use tax, we do also need to pay estate taxes when we pass on our assets to the next generation, which is very important. But there are some limits. Everyone doesn't need to pay taxes on the estate taxes, but if you cross some limits on the asset on estate, then you have to pay taxes. Let's do a deep dive like that on this topic again. And before getting into the topic, as usual, today with me our tax director Abhishek Gandhi, CPA, is also here, who will share the knowledge with you. And just before getting into the topic, this is a very brief about me. I am in the industry of finance, tax, and accounting for more than 20 years, serving as a CFO, finance controller, and other finance positions. I work for Amazon, Starbucks, PricewaterhouseCoopers, and Sun Edison, and I am also serving as a Forbes Finance Council member for the last couple of years. And today, our topic estate and gift tax planning. I will hand over the stage to the speaker, Abhishek Gandhi. Abhishek, can you please take it over?
Yeah, thank you. Thank you, Anil. Thanks for that introduction. And hello, everyone, today. Today, as Anil said, we are going to dive into often complex but crucially important tax planning. So, as Anil said, this is many times it is not very, it is untouched area. And not everybody is paying gift tax or estate taxes. But still, today I will talk and I will discuss with you how you can get a benefit out of gift and estate tax. So, and now I know that what you're thinking, man, taxes, what a buzzkill. But trust me, understanding this can be the difference between your hard earned wealth going to loved ones or Uncle Sam. Let's start with the basics. Estate and gift taxes are essentially fees imposed by the federal government on the transfer of property. So it's basically a fee that you transfer from one family member to another family member. That's the easiest way to understand. When you pass away, I'm sorry, but think about it hypothetically. Uh, your estate might face the estate tax. If you are feeling generous during your lifetime, the gift tax currently there is a pretty significant exemption of 13.61 million per individual for both estate and gift tax. So that's a lot of it. But remember, this number is subject to change after 2025. So it is essential to plan ahead. So let's understand the basics of estate and gift tax. Let's break down this taxes a bit more. So the estate tax is levied on the total value of your estate of your assets when you passed away. So think Think of it as a final exam for your financial life. One another thing, like the gift tax applies to any assets you transfer while you are still alive. The good news is you can gift up to $18,000 per person per year without incurring any gift tax. This is called the annual exclusion. It is like a little holiday bonus for your generosity. And remember that 13.61 million exemption that just I said, but it's a combined number for both estate and gift taxes, so you can use it strategically. Now let's talk about how to protect your hard-earned wealth from taxman. IRS. So the first strategy is to make the most of that annual gift exclusion. Give small gifts to your loved ones each year. It adds up over a time and reduce the size of your taxable estate. Next, that consider leveraging your lifetime exemption. By gifting assets during your lifetime, you can take advantage of the exemption and remove the future growth of those assets from your estate. Think of it as a financial head starts for your heirs. So now what it means is when you transfer all your asset to your heirs, then any growth or any capital gain, you will not be paying any taxes on that. Trust can be powerful tool in estate planning. Revocable trust give you flexibility, while irrevocable trust can offer significant tax benefits. But remember, these are complex instruments, so it is crucial to consult with an estate planning attorney. It is very important. Now, advanced estate planning strategies are, uh, we have already covered the basics. So let's talk about it a little bit deeper now. So, charitable giving is not only a noble act, but also a smart tax saving strategy. By donating to qualified charities, you can reduce the size of your taxable estate. Family limited partnership, which is we know as FLP. So FLPs are intriguing option. It is very, very fascinating. By transferring asset to FLP, you can often reduce their value for tax purposes. However, FLPs are complex and require careful planning. So for married couples, probability is a game changer because if one spouse die without using up their entire estate tax planning or that exemption, the surviving spouse can potentially use the unused portion. It's like getting an extension on your tax return. So, now what is a valuation discount and regular review? Let me explain. The value of your assets is a crucial in determining your estate tax liability. For businesses in real estate, valuation discounts can sometimes apply, reducing your taxable value. But remember, valuation is complex and subject to IRS scrutiny. So be very, very careful. Lastly, estate planning isn't one and done affair. It's not like one time thing, you prepared it, you did it, and you forget about it. No, because life changes, tax laws changes, and your goal evolves. So Regular review of your estate plan is essential to ensure it align with your current situation and future aspirations. One more aspect, that is about 529 and custodial accounts. This is a planning for next generation. We all like to plan for our kids and even grandsons and granddaughters, right? So how we can take care of this? While not traditional estate planning, 529 accounts and custodial accounts can play a role in your overall strategy. 529 offers tax advantage for saving for education. And while the funds typically belong to the beneficiary, strategic contribution can impact estate tax calculations. Custodial accounts are great for gifting to minors, but again, remember the asset will eventually belong to the child. So this all are the factors and aspects that we have to keep in mind. Now, what is today's conclusion? The takeaway is estate and gift tax planning might seem daunting, but it is a crucial aspect of ensuring your legacy. By understanding the basics, exploring advanced strategies, and seeking professional advice, you can protect your wealth and provide for your loved ones. Remember, this is not a financial advice. It is essential to consult with an estate planning attorney and tax advisor to create personalized plan which is tailored for your own specific needs and your goals, your specific goals. So this is very important. It needs some legal, there are legal aspect to it. So take a legal advice, take take help of professionals, and that is how we can move forward. Now, let's open it up for the questions. I think you enjoyed today's session and you gathered a lot of information. Uh, so I will hand it over to Anil and I will ask you if you have any questions. Please feel free to to type your question here.
Thank you. Thank you very much, Abhishek, for covering it so nicely. And viewers, if you understand the dynamics here, we all need to do the estate planning. You may be thinking you may not come under the 13 million plus net worth threshold, but from the year 2025-26 onwards, the number is going down to $5 million. From $13 million, it is coming to $5 million plus. So we have to start doing planning now because I strongly believe most of us might end up with more than $5 million of net worth by the time of our life ends. At the time our life ends, so it's better to plan now in advance. So if you believe that it definitely comes under higher net worth bucket, then I strongly recommend you to start working with your attorney on planning on doing estate tax planning. If you need any help, feel free to reach us also. We are working with few attorneys and we should be able to help you on doing a proper estate tax planning, including by considering tax perspective also. An attorney and tax professionals can work together to help you better. Then to make it very simple, you start planning on you start estate planning from now onwards by giving around $18,000, less than $18,000 per year to per kid. From now onwards you can give $18,000. Your kid also, your spouse also can give $18,000 to your kid, so that you don't need to file any gift tax return. but at the same time you are transferring your assets to the next generation year on year. And my recommendation, rather than giving it in the cash, if possible, give it some appreciable assets, maybe some stocks or maybe some small real estate properties if we have, maybe together, or small land if we have, maybe appreciable assets if you can give it. So once the asset transfer to the next generation, the asset will continue to appreciate, but you don't need to pay, you don't need to worry about estate taxes here. So start planning, start be proactive, and if you believe that your net worth is more than $10 million, definitely feel free to reach us, because there is a lot of planning can be done. Otherwise, the estate tax rates are around 40%. If you cross the threshold limit, the federal estate taxes you need to pay, and state estate taxes also you need to pay. In some states, the threshold limit at the state estate taxes is only just 1 million. Till now, whatever we are discussing about $13 million, together $26 million, those all are only at the federal level. What about state level? Even states also charge estate taxes. So it's very important, based on which state you live, based on what is your financial position, what is your forecast on your net worth in the next few years or in the next couple of decades. You need to know all these numbers. If you believe that you come under this bucket, definitely I strongly recommend you to start working on it now onwards rather than worrying later. We are here to help you for any problem you have or any planning you need. It can be an estate planning, it can be a proactive tax planning, either at your for your network building or from your business perspective. We are here again. If you have any more questions, feel free to post your questions. We are opening up the questions. Yeah, you can post questions in any of our social media channels. It can be LinkedIn, Instagram, Twitter, or Facebook. I will look into the questions.